There's mixed signals for where our economy and, importantly, interest rates are going next year. New Zealand Central Bank has just imposed its biggest single rate hike of 0.75%, and it warns the country will be in recession for 4 quarters next year, all 4 quarters. But in the United States, the Federal Reserve is starting to pull back on the pace of their interest rate hikes. So this doesn't mean global inflation is anywhere near under control. But what does it mean for us? Let's bring in our business reporter, Ed Boyd, now. He joins us. Why is one bank going harder? The other is starting to slow things down, Ed.
Yeah, we read the minutes overnight from the US Federal Reserve, and in those minutes from their recent board meeting, they do talk about how they're considering slowing the pace of interest rate hikes in the United States. So their previous couple of lifts in interest rates has been by 75 basis points, and they're looking at doing 50 basis points next month in December. Then their next cash rate decision will be at the end of January. So in the US, the bankers over there believe they've almost done enough to quell inflation. They still need to keep lifting rates, but they're going to go at a slower pace. The big contrast, though, is with the Reserve Bank of New Zealand. Governor Adrian Orr yesterday lifted rates by 75 basis points and said the country's likely to be in a recession next year, and it's going to require even more lifts to the cash rate next year. So their first board meeting is in February. That's expected to be another 75 basis points in February in New Zealand. So two sort of different messages here from two pretty important central bankers. One thing I will say, though, in the US, the cash rate's currently at 4%. In New Zealand, it's at 4.25%. So their cash rates are at similar levels right now. But clearly, New Zealand is more worried about inflation than the central bankers in America.
Yeah, interesting. Look, let's look at another story as well, because this is affecting most travellers, if not, a big quantity in Australia. Qantas shares, the top performer yesterday. It's delivered a $1 billion profit boom in just 6 weeks. But there's some criticism because fares are the most expensive they've ever been.
Yeah, I actually just looked at the price of a fare from Sydney to Melbourne this time next week on Thursday, and the cheapest fare on Qantas was $466 for a one-way ticket to Melbourne.
Wow.
Which just sounds astonishing. You could go on Jetstar for $340, but you'd have to leave at 6 o'clock in the morning. So airfares right now across all the airlines are unbelievably high, and that is the thing that's giving profits not only to Qantas, but all of the airlines in Australia. So go back 6 weeks ago, before Qantas announced that profit upgrade, a lot of financial analysts were expecting them to make a profit of about $350 million in this half year, this 6-month period. That's now yesterday been upgraded by Qantas to up to $1.45 billion in profit over just 6 months, and it's all due to those airfares and people still wanting to travel and pay those really high costs.
Yeah, so is Qantas going to be under pressure here, Ed, to put on more sale fares, bring down the average cost, because it doesn't seem equitable at the moment?
Surely they're going to be under pressure, along with the other airlines, to start putting more capacity back into the market, because Qantas yesterday said they're still not operating at 100% capacity of pre-COVID levels. So they've still obviously got a few planes on the ground in reserve. I think they're going to be under pressure from the government to get those planes up in the air, boost capacity, get more numbers into the skies so more people can get tickets, and that should push the price of tickets down in theory. But the thing the airlines keep talking about is high oil prices. Aviation fuel's expensive, but still, it's been expensive for the last couple of years, and airfares are really starting to peak in price now. So it's a problem.
Alan Joyce told Sky News a couple of months ago that there's no way that Qantas could absorb those higher oil jet fuel costs. Well, the profit results show that he probably can. Ed, we'll see you soon.